Last week I asked everyone what stocks they'd like for me to review, and 2 people replied. So today we are going to look at ticker SMIF and FFAI. Okay, so looking at our first ticker, SMIF, it's 24 Select Monthly Income Fund Limited. Looking here, ticker, there's not much information around it. There's just basic information about the company. There's no financials or anything yet. So I've had a look at their website, and basically they're a London-listed close-ended investment company which seeks to take advantage of the premium yields available in less liquid securities across global credit markets. So at the launch, the company had a target total return of the original issue price between 8 and 10% per annum. And then this comprises of a target dividend payment of about 6 pence per share per annum as well. A target capital return of 2 to 4 pence based on the original issue amount of 100 pence. So obviously there's no guarantee of that, but the 6 pence per share per annum as the dividend target has been consistently met. And if we look across basically to see that, we can see that they do try to meet a minimum of basically half a pence per share, and they've actively hit that every payment over this past years have. You can see there in July this year and in April this year they actually had 0.75, and back in October last year they had 1.38 pence per share. So looking at the company themselves, so this is the latest annual report. It's actually from September 2024. If we scroll down here, we can see so net asset value per share is 83 pence versus last year in 2023 where it was 75 pence. The share price is 85 pence as of September 2024. It's actually currently 89 pence as of yesterday. Looking on down, total assets, they have 219 million. Up from 181 million, so that's a big jump over this past year. And then the dividends declared is 7.38 pence versus 7.37 pence, so not a big difference in the actual dividends over the year. If we scroll down here, we can have a look at the actual where it says about the dividends. Page 18, I think it is. Yep, so on the strategic report, so dividends, the company has a dividend target of 6 pence per ordinary share each financial year, and the board consequently sets a minimum monthly dividend of 0.5 pence per share. And we can see that in the history, they are actually paying it out. So it's not a massive dividend, 6 pence per share, and obviously you're paying 89 pence per share now at the moment. So it's not going to make a massive amount of money, but it is a steady income, which is good. There's no big jumps in it. Looking in at the actual financial sheets then, so you can see the total income is 41,000, nearly 42,000 compared to 29,000 back in 2023. You can see there the interest and income of financial assets is about the same. They're up about 3.5 million on foreign currency gains. And then the big one then is the net gains from financial assets. So it's up from 7.2 to 15.8 million. So that's where the most of the income is coming in 2024. Expensive hasn't really moved much, so there's nothing to worry much about there. So the income for the year is basically 39.5 million compared to 26.9 million the year before. So there's a good healthy jump there in the income. Financial position themselves, so the current assets, good high amount of current assets over the year. You can see a big jump there is from investments sold up from 178 to 205 million. So a good significant jump there. You can also see amounts due from the brokers, 10 million. That's quite a bit to be due from the broker. Looking just quickly down at the current liabilities, you can see the amount due to the broker is about 7 million. So there's a difference of 3 million here. So if the broker decided not to pay, yeah, the company wouldn't get £10 million, but then on the other hand, the fund owes the broker £7 million, so there's about a difference of £3 million there. Everything else, receivables and cash, is roughly the same. Cash up actually good, but from 5.3 million to 7.5, so holding quite a bit of cash in hand, £7.5 million cash, So the total assets are definitely a good sizable chunk, or a good jump from the previous year. Looking down to current liabilities, they're up from 4.4 million to 8.9 million. So the net assets overall is up to 219 million from 181. So the net assets, there's quite above net assets there, and we can see there's about £7.5 million in cash there as well. So quite quite good. We can't complain with that, especially since it's current assets as well. So it's quick to liquidate if we had to pay off some current liabilities. So scooting on down, basically see the income. So basically every issue of treasury shares 3 million, issue shares 15 million. So it brought in quite a bit of money there. Dividends paid out is 19.3 million. So overall, the amount of money brought in from the 1st of October, the balance, versus the issue of treasury shares and issue of shares, has brought in quite a bit of money there versus what was going out. So the total is 119 million, versus the year before, the end of 2023, which is the 181 million. So it's good cash flow there. So there's coming on, or sorry, good incomes coming on. The cash flows here themselves, looking at it, that's obviously the income at the very top there. Dividends, so they have done quite a bit of dividends, or sorry, investments, purchased investments. So they purchased 85 million worth of investments, whereas the sale of 70 million. So they've bought in 70 million worth of investments, and they've obviously sold 85 million worth compared to the year before, where they've only made 51 million pounds worth of investments, and we brought in 34 million from sales. So a massive jump in regards to actual cash brought in through operating activities. Last year, or in 2023, 14,000 versus 4.4 million. So that's a massive difference from what they brought in. So that's quite good. Financing activities. So obviously the shares paid out, 19 million pounds worth of shares paid out, dividends paid out, and then the proceeds from issue of shares is 14.4 million come back in again. So they're overall they're down basically 2 million this year, financing activities compared to the year before, which was 4.6 million. So you can see the increase in cash equivalents is 2.2, so still quite a bit of cash there to have at the end of the year. And then you can see on down here the cash equivalents beginning of the year was 5.3, so 5.3 plus the 2.2 they made during the year, sits leaves them sitting with basically 7.5 million in cash, which we've seen earlier on there. So they have quite a bit of cash there, so that's good to see. So all in all, if we look just basically at the share price itself, we can see over the last 3 months, you can look up here, you can see 1.4 return over this past 3 months, 5.5 CAGR, 6 months it's out to 7.1 CAGR, the year it's 4.2, the 1 year is 5.5, 3 years is 8, 5 years drops down to 1.7, and 10 years is minus 0.8. So over this past couple of years, it has been growing. So this is steady grower. You do have a steady income, so it's good to see that. That is starting to sort of rise. It hasn't been massive, big difference. You can see obviously there around March 2020, so that's during COVID. But you can see, yeah, it's been ups and downs. It's been down a bit over that back end of 2022 into 2023, starting to rise again. So overall, what's my thoughts on it? Yeah, I think it's something that if you're wanting to invest is quite cheap. You can see it's 89 pence. You're getting 6 pence back on every share. So your dividend there is actually quite good. I would say if I was looking something that's low risk, steady income, I would say this is probably a buy. So yeah, that's my assessment on this. Good income, 6 pence per share every year, paid monthly, half a pence per share every month. Quite cheap at 89 pence. That would soon add up if you start to invest in that and put some money into it. So yeah, this for me would be a buy. Okay, on to the next. Okay, so FFAI, Faraday Future Intelligent Electric. Yeah, first things first, there's a lot of red showing up here on the screen, and the stock price themselves over this past year, it has sort of spiked here and started to increase around June this year. Got up to peaks there in July, a wee peak there in August, and it started to drop off again. So that seems to be sort of default pricing around here, sort of 130, 129, yeah, and around sort of this price, 120 to 130 seems to be the price here, where it's coming back down to. As I say, there's a lot of red. Ignore this because, well, obviously Friday there yesterday, Donald Trump announced some tariffs in China, and that crashed everything, so everything fell. But overall, looking at the last 12 months, everything's in red. So there's the PE's zero. Last 12 month PE was 0.24. Something very strange is the 2-year revenue CAGR is 406%. That's questionable. So yeah, let's see what's they actually do. So engage in future and design and development, manufacturing, engineering, distribution, and the sale of electric vehicles and related products in the United States. So basically they're EVs. You can see the industry is automobiles. So let's look at the financials. So the income, the revenue's not overly massive, 0.78 in 2023, 0.5, 2024, 0.61 over the last 12 months. Cost of goods sold is going minus and increasing. So gross profit is getting worse and worse each year, so that's not a good sign. Operating expenses themselves, they look to have peaked in around 2022. It has been improving, let's just say, over this past couple of years, up until the last 12 months. Net income, yeah, everything's a lot of red stuff here. You can see net income 2022, 602, minus 602. It does get slightly better, but yeah, it's a long way to go. Last 12 months, minus 333. That's quite a bit. Basic EPS, yeah, again, minus, that's not good, obviously. The net income divided by the number of shares, so it's not looking good. Balance sheet, cash equivalents, yeah, they have 1.3 in there, so they have, or sorry, 13.23 in cash. Let's see what their current assets. Current assets are 76. What's the current liabilities? 222. Yeah, so if they had to start and cash in to try and settle their current liabilities, they just don't have the cash there, so they don't. So that's not great. Total debt 74. Cash flows. So cash from operations. They're still losing money from cash from operations. It's increasing over the last 12 months, increased from 2024. Loss from assets, or operating activities. So a change in accounts payable, that's increased. Cash from investing, there's not too much cash from investing earlier. Again, it's minus, is actually getting worse again over the last 12 months. Financing, so they have got some money from financing, so the total debt issued, so they're taking on loans. The loans did drop off in 2024, but they've taken on more loans again. So 113. Cash in hand 11.88. Yeah, not much cash in hand. And free cash flow, again, it's down to the minuses, so they don't have much cash. Well, they have no cash basically. Yeah, this company, there's too much red here at the moment. This would be quite a big risk for me. Personally, I wouldn't be looking to invest in this company. Yeah, the share price is stable, but it's not really moving. It's not really growing now at the moment. Let's see, is there any dividends been paid? I don't think there is. No dividends. EPS normalized doesn't exist for the next 2 years. Yeah, I would hazard or be very cautious on the stock. Personally, if it was me, I wouldn't be investing in this. I would want to see a lot of improvements in the and the cash flow and the cash coming from operations and the net income before even thinking about investing in this company. So this one here for me, it's a no. Okay, that's all. Thanks very much. If you want to get some stocks analysed, drop a message in the comments and I will go through a review like this and see what we get. Thanks. Bye bye.